think, act, and prosper. You are now tuned into the Money Level Show.
Alrighty, everyone. Welcome back to the Money Level Show. Today we're going to talk about, is gold expensive or cheap? And we're going to get into that right now. And so I'm going to go ahead and throw up this chart. This chart is actually a M2 money supply chart from the Federal Reserve, the St. Louis Fed. And this shows how much currency is in circulation in the economy. And so you see on the side you have 2,000. These are actually in billions of dollars, 2,000 billion. And so when you think about 2,000 billion, you have to count, okay, well, 999 billion is only 1 billion away from a trillion, right? And so 1,000 billion is 1 trillion. And so when you think about that, okay, so you have 2 trillion, 8 trillion, you have, so it goes up to 20 trillion. And then you have the year charts down here, which are around 2000, and it goes up to about 2019, 2020. And so I want to get into this chart. So with M2 money supply, you want to look at, okay, how much money is in circulation and how much is increasing. And this is important because as the more money comes to circulation, the more money is printed or digits created in accounts and things like that, our dollar loses value. And so if you think about this, you think about the Mona Lisa, for example. If there was a lot of Mona Lisas, a million Mona Lisas going around, the value of it would decrease. But it's so rare. That's the reason why it goes up in value, because it's so rare. And that happens with a lot of other things, whether that's like sports jerseys signed by Michael Jordan or whatever it may be. If a lot of those are in circulation, it's going to decrease in value. And so that is how money works as well. The dollar has lost a lot of value since the early 1900s. And we've seen that in 1913, $1 could get you $26 worth of goods and services today. And so the dollar has lost a lot of value. And so as this chart continuously goes up, the dollar is going to lose value because more money is being supplied into the economy. So if you look around 2000, the price of gold will hover around 250, 300 bucks. I was young then, so I wasn't really sure about gold and didn't know anything about it, didn't think about it. I wish I would have. I wish I would have bought gold around that time. So around that time, gold was hovering around there. You did have the dot-com bust, which was in 2000. Some of us know it as Y2K. And this actually increases the money supply. And then you get to 2008. And you have the global financial crisis, which was that recession that we had. And the GFC, you see that the money supply increases dramatically. And this was when the Federal Reserve tried quantitative easing, which was also called money printing, or printing more money or making more money go into the economy. And so you see this actually increasing. And then the price of gold goes up to 1900 around that time. And this was around 2008 to 2011. And then gold takes a sharp dive and goes down to $1,000, around 1,000 to 1,100. And so it corrected. And so gold was really high around this time, and it went down to about 1,000 to 1,100 bucks. So then you see as the money supply increases even more dramatically since COVID and all of those different things. In 2020, gold hit all-time highs, which this isn't the exact all-time high number. It's just around this number. So these are all just estimates, because I remember seeing gold hit 2,050 bucks, and I think it went a little bit higher than that. And so as the money supply increase, you have gold at $2,050. So when you think about this, you got to compare the two. Okay, 2008, our dollars could actually, buy more with our dollars, because the value of the dollar was worth a little bit more than what it is today. But when you think about this, okay, gold hits 1900 around this time, and then it takes a sharp dive down. That means that gold was overbought. A lot of people piled into gold during that crisis, and they actually drove the price of gold up. And so gold technically became overvalued. And so that is why gold took a sharp dive back down to about 1,000 to 1,100. So because you have to look, this is only $150 difference between the levels of money supply in circulation in the economy. And so here you have a huge amount of money that is circulating around the economy. And here you don't have as much as here. So gold should have been cheaper around this time in relation to the M2 money supply. When you look at that, it's like, okay, well, gold around this time was actually expensive. And I say that because a lot of people piled in, they drove the price of gold up. And you think about this like in terms of stocks like Tesla. Tesla had went up to close to $2,000 or something like that. You know, something crazy. And a lot of people were piling in, speculating and all that stuff, and it drove the price of Tesla up. So the same thing happened with gold around this time. People drove the price up, and the money supply, it increased during that time, but it wasn't to this degree right here. So when you look at this, gold is either undervalued here and overvalued here, or it's undervalued here, or at the price it should be, and undervalued here. You know, so when you think about that, it's like, okay, well, was gold supposed to be 1900 around that time? You know, was it? You know, maybe. I mean, I think the true value of gold is more than what is stated on the price. I mean, because you do have manipulation of banks. I mean, J.P. Morgan Chase just got fined $1 billion for spoofing and making calls on gold to kind of manipulate the price of it. But here, in relation to the money supply, it shouldn't have been this high because the money supply is really increased here. So when you're looking at this, gold should either be more expensive than what it is today, or it should be valued around this number, which I think that gold is actually undervalued today. And it may seem like it's more. I mean, when you're looking at nominal prices, which are the actual numbers, you're like, hey, well, you know, I still got $2,000 today, and I could only get, 1 ounce of gold. Yeah, those are nominal prices, but those $2,000 has actually increased over time, because if you had $2,000 around here, you could get, multiple ounces, about eight ounces of gold here. And so when you look at it over time, the value of the dollar has decreased. So now you can't buy as much with your dollars. And so when you look at that, so you look at this as expensive when it's really not, in relation to the money supply actually increasing like that, and the value of the dollar going down more. So I hope all of this makes sense. This stuff can get kind of confusing when you get into this macro space of everything with macroeconomics and these charts and things like that into money supply. I mean, all these terms are like some big terms that a lot of people don't really know, and I'm learning myself. But this is how this works. So money supply have went up dramatically, and gold is at 2,000. So gold is either cheap right now, which I believe is cheap, or it should be at the price that it's at. And the same thing around here. I believe here gold was too expensive, and that's why we saw a huge correction in the gold market, and gold had went down to about $1,000 to $1,100 an ounce. So I hope this was all helpful today. You can always buy gold in fractions. You can buy gold in 1/10 of ounces, 1/8 of ounces. You can buy it in grams. There's about 31 grams in an ounce. So you can buy cheaper versions of this, so you don't have to spend $2,000 for an ounce. You can actually buy smaller versions, smaller fractions. A lot of times I do the 1/10 of ounces. I've done the 2/10 of ounces and things of that nature. So I've done that quite a bit. I've done grams. I've done 1/10 of grams. And so you can definitely get this stuff way cheaper. I mean, a gram's going to run you about, 75 to 85 bucks, something like that with the premiums. And then you have, the 1/10 of grams, which you can get for about 20 bucks or less. So that is how you could buy gold. As we see that as money decreased in value, gold has went up in value. And so that's something to consider whenever you want to build wealth and store your value in gold. So thank you all for tuning in today, and y'all have a blessed day.